I want to talk about slippage real quick. This is actually important. This is something you guys need to know. I kind of want to do it on, I want to do a trade, a real trade, so I can show you maybe. I need some shit coin that I don't have a trade open in real quick. Let me find some. I mean, too many of them. I'm going to show you. Let me go to Phemex. So here's Phemex, right? So slippage is, it's like a secret tax that you might be getting taxed, okay? So let's say Algorand, right? So here's Algorand, right? And I'm just picking that because it's kind of low liquidity. And so we're looking at the, let's put on the 1 minute chart, okay? So slippage is the difference. So here's the order book right here. And you're going to see a small difference here. You know, you're seeing, so the green are the buys that are in the order book and the red are the sells. Slippage occurs when you do a market order. Up here on the right, you have market order. This is your leverage. Always, by the way, have everything on isolation. I almost have no reason to ever put it on cross. Cross is the default though. So you got to make sure that it says isolation, okay? Because this is what keeps it so that the money you put on this trade for leverage is only for this trade. You'll get liquidated if you run out of money, but only the money on this trade. Whereas if you run on cross, it's your whole entire bankroll. So, you know, you fall asleep or the internet goes out or something like that. You know what I'm saying? Like, yeah, you won't get stopped out because of that one position, but your whole entire bankroll, if some crazy squeeze or something happens. So always have it on isolation. Then you go here, it's got these, you know, 10x. We'll just keep it at 10x, right? It's fine. Right here, this is the position size. So this is not my margin. This is so $100 is only going to be $10 approximately. You see down here? But here's the thing. The slippage is not only the gap between the bid and the ask, which we call the spread, it's also how much you buy. So like if I do a limit order, you won't get slippage because it's only like if I said I wanted to sell it right here at one of these numbers, you can just click actually the number and it'll pop up here. You see it just changes. Just for the sake of this video, I'll do like, I'll make it a big position even. 5,000 we'll say, right? So if 5,000, which would cost me $500, okay, that because I'm on 10x leverage, what happens is, in matter of fact, I can even make it less money for me if I wanted to go 20x. It doesn't matter. So basically, if you're on limit, it'll only get this price. So maybe not all 5,000 will go in one fill, because the fills, you can see your fills down here, and it'll take a few hits because maybe there wasn't enough buyers, you know what I'm saying, or sellers, or whatever it is, whatever direction you're going in. And so you might feel like $1,000 worth and $2,000 worth, and then a little bit more, right? But if you did market order, it would buy everything immediately. So I might look at this and I'm going to say, okay, 0.2646 is what I want to do a market order on for $5,000. But what's going to happen is your average buy is not going to be 2646. So let's just do it one time, right? I'm going to short it. We'll say, if I click open short, remember we're at 2646, and I'll do it, $5,000 worth. Boom. What did my fill? So we were at 2646, 2641. Can you see down here? Algorand, 2641. So the slippage was that difference because I bought some of the, let's see if it showed up in the fills. I mean, 5,000 not that much money. Okay, you can see in the fills how many fills it took to get there. You see what I'm saying? So these all happened like instantly, but there was a bunch of different fills that happened at once. And it'll see the price. Let me get closer so I can look at it. So the execution price, you see this was here? So it started down here, right? The first fill started here, right? So yeah, it was 2641. Can you see this? 2641. It was a few of them were 2641s, a few of them were 2643s, 42s and 43s, and then all the way up to 2646. So if I had done $10,000 worth, then it would have been even more going up, and my average price wouldn't be as good. You see what I'm saying? So that's slippage. You're not, because it bought all of these when I did it, when I shorted them. It took whatever was available in the order book. So you see why my average was not 2646. You see what I'm saying? It was 2641. It wasn't as good. And then there's a little bit of fees on there as well. So that's what I wanted to show you guys with slippage. This matters when you're doing big positions, and it also matters more so what ticker you're on, right? If I did $5,000 worth of Bitcoin, you basically have no slippage. So think about this. If you got 100 grand that you want to put on a trade, and then you're doing 10x leverage, that's $1 million, right? You don't want to do $1 million trade on Algorand in market order. Do you understand? You're gonna lose hella money. If we did $1 million right here, that would be hella slippage. Imagine slippage on only $5,000, right? So you don't want to do that. If you want to trade $1 million, then you do want to put in, you want to trade Bitcoin or Ethereum or something with a lot of liquidity. Okay, I got to warn you guys of that.